certainly inflation, we all know what that should do for precious metals prices. Trump is even talking about putting tariffs on metal that comes into the United States, which this is one of the reasons you're seeing, again, this big spread between the exchange for physical price and the spot price, where if you have to exchange it for physical, across the globe, it's going to be a whole lot more expensive right now, fearing these tariffs. In other words, if they wanted to buy a contract here and exchange it for physical and take it back to the United States, the premiums have blown out because the fear is that once he takes office, he'll put tariffs on precious metals imports as well, which would push the price up tremendously. Inflation, obviously, the price should go much, much higher, and that's really what the whole premise of owning gold is. It's in silver. It's not that gold and silver are going higher. It's that the dollar is being inflated out from underneath us. I asked Judy Shelton the other day in my interview with her. I said, "Who came up with this boneheaded idea of a 2% mandate? Why not zero?" Because with a 2% mandate in 10 years, you've lost 20%. I said, my father graduated. I'm sorry, this little dog is insane and she's all over the place. He graduated college in 63. He was married at that point, my mother, and he said, I made $6,500 a year and I could live comfortably on that. Your mom and I could live comfortable on that in 1963. So, have things gotten that much more expensive, or has the dollar lost that much of its purchasing power? So when we look at you look at, imagine this was real, this is fake, it's a bank. But imagine a COMEX 100-ounce gold bar in 1974 when the exchange was founded. Gold was $42 an ounce. So, 42, it would have cost you for a 400-ounce gold bar like $14,000 to buy a 400-ounce gold bar in 1974. Well, what does it cost today? Is the price of gold go that much higher to where it's almost $1.2 million? Or did the dollar lose that much of its purchasing power since 1974? My dad bought a Corvette in 1973 for $6,500, a Corvette Stingray. Now they're 116. The point of it is that over time, inflation is an insidious tax on your wealth. And so what gold does is it doesn't go higher. It retains its value in an inflationary environment. And everything Trump is talking about is inflationary, whether it be tariffs, which will mean higher prices to the consumer, or whether it be an inflationary policy, a weakened dollar, low interest rates. These all mean softer purchasing power. So I would say inflation is here, and you can see that the bond market sees that. That's why rates are going higher. And with all things being equal, even if they are able to trim $2 trillion off the deficit and off of the stupid spending of the government, that still leaves over a $1 trillion deficit every year. We're not addressing the root problem, and that is the fact that the deficit keeps adding to the debt.
Inflation, dear listeners, is the silent thief of wealth. And yet here we are, watching it march forward as if it's some inevitable force of nature. Andy Schectman's observations about the relentless devaluation of the dollar provide a sobering context for why gold and silver remain timeless assets. The idea of Trump imposing tariffs on metal imports may sound like a protectionist policy, but as Schectman pointed out, it's inherently inflationary. Imagine having to pay more for goods simply because they cross a border. Consumers ultimately bear the cost. The tariffs on precious metal imports, if they materialize, would have a seismic impact. They would push premiums on physical gold and silver even higher. Already, we've seen significant spreads between the spot price and the exchange for physical price due to similar market fears. It's simple economics. As the cost of acquiring these metals rises, so does the price the market is willing to pay. Let's revisit Schectman's conversation with Judy Shelton. He raised a question that seems glaringly obvious yet rarely addressed. Why a 2% inflation target? As he noted, a 2% inflation rate erodes 20% of your purchasing power in just 10 years. That's not a small dent. It's a gaping hole in your financial security. This target, masquerading as economic stability, is nothing more than a systematic devaluation of your hard-earned money. Take a walk down memory lane with Schectman's father, who graduated college in 1963 and lived comfortably on $6,500 a year. Fast forward to today, and that same amount wouldn't even cover 6 months of modest living. Is this progress? Or is it the dollar's relentless slide into irrelevance? The cost of goods hasn't risen as much as the dollar's purchasing power has fallen. Let's indulge in a little math to understand the magnitude of this shift. In 1974, when the COMEX was founded, gold was priced at $42 per ounce. A 400-ounce gold bar would cost you about $14,000. Today, that same bar is worth well over $1.2 million. Did gold become intrinsically more valuable? Number. The dollar simply lost its purchasing power. The same devaluation is evident across other assets. Take cars, for instance. A Corvette Stingray in 1973 cost $6,500. Today, you're looking at a sticker price north of $116,000. The conclusion is clear. Gold retains its value as fiat currencies falter. Gold doesn't just preserve value, it thrives in inflationary environments. As Schectman emphasized, inflation is essentially a tax, a stealthy way for governments to finance their deficits without openly raising taxes. And the numbers don't lie. By 2031, according to the Congressional Budget Office, 100% of income tax revenue will go toward paying interest on the national debt and mandatory entitlements like Social Security and Medicare. This grim forecast underscores the inevitability of inflation. Whether through higher interest rates or money printing, governments are cornered. The bond market sees this reality as evidenced by rising yields. And yet, even as interest rates climb, they remain insufficient to attract meaningful demand for U.S. treasuries. The result? Yield curve control becomes the only viable option, further inflating the currency. In this storm of fiscal irresponsibility and monetary manipulation, gold stands as the anchor. It's not about gold going up, it's about fiat currencies going down. Whether through outright devaluation or stealthy inflation, the purchasing power of the dollar is eroding. And while some may argue that inflation is transitory or manageable, history tells a different story. The suppressed interest rates of the past 2 decades have created massive distortions in asset prices. As rates rise, these distortions will unravel, revealing the true value, or lack thereof, of overinflated assets. Schectman also raised an intriguing possibility: the U.S. establishing a strategic Bitcoin account alongside a gold-backed currency. This hybrid approach could leverage the benefits of both digital and physical assets, creating a monetary system that is both resilient and forward-looking. The road to economic stability won't be easy. As Schectman noted, it will likely involve significant pain, whether through a reset, restructuring, or both. But for those who see the writing on the wall, the opportunity to protect and grow wealth is immense. Gold and silver aren't just relics of the past, they are the keys to navigating an uncertain future. As we ponder these possibilities, one thing is clear: the time to act is now. Whether you're concerned about inflation, tariffs, or the broader economic outlook, gold and silver offer a hedge against the unknown. Don't wait for the system to implode. Position yourself today for the opportunities of tomorrow.
And, by 2031, 100% of income tax revenue, according to the Congressional Budget Office, goes to pay the interest on the debt and mandatory entitlements, which ironically are off balance sheet. Social Security and Medicaid and Medicare, he won't touch those. He already said that. So, inflation has to stay here because no one wants our treasuries at these rates. So if rates, and that means rates have to go higher. That hurts the economy. That hurts the banks. And if not, that means yield curve control. That means printing money out of thin air to buy bonds. That's Weimar Republic. That all leads to the same road. And, who knows when this all happens? They've been masterful at being able to keep the ball up in the air. But just speaking practically, at some point, the jig is up. So yeah, for the people who are retiring right now, I don't know. I would be more concerned about their kids, people our age who, things may be a little bit different over the next 5-6 years. Yeah, there is certainly reason to be optimistic, but we're talking a long road to hoe to bring back manufacturing, to bring back the things that made this country great. And to get there, it's going to take maybe a reset And short of that, a whole lot of debt restructuring, which is not going to be easy. It's going to be painful. So, inflation is here to stay and it's not going to go away. And with that, that would mean higher interest rates. And so all of these complexities that we have to think about, to me, all boil down to kind of one thing. And that is that over 20 years, the suppressed interest rates created massive, massive illusions and distortions in asset prices. And people are not prepared to understand what those asset prices really are when they find equilibrium with the rising interest rate environment. So, I guess I wonder every time I have these discussions, is this why Trump is here? Is he here to orchestrate a controlled demolition because he is the expert of bankruptcy and restructuring? Does he know, and do his advisors tell you, we're screwed? We're so far down the rabbit hole, there's no way out. So we can manufacture this implosion. And what does that implosion look like? What does he roll out? Does he roll out constitutional money, or does he roll out the CBDC? And that would be the question. Is he on the horse, or is he the Trojan horse? If he's the Trojan horse, then they roll out the CBDC is what that's what the Davos folks want. And that's what the WHO wants, and that's the Klaus Schwab. That's what they want. They want a central bank digital currency. Or do we go back to constitutional sound money? Do they revalue gold? Do they have a Bitcoin strategic account and revalue gold and have assets that allow them to create a new monetary system based off of commodities with a marriage of blockchain technology? Maybe. And I hope people understand that I voted for Trump, and I thank God he's here. But if you don't question this stuff, you missed out on everything that we've been through in the last 4 years. And you have to ask yourself, the dude is the expert of restructuring and bankruptcy. No better person to bring on board. Bring on a cabinet that inspires unity and patriotism. And we did all we could with Doge, but boy, we're in big trouble. And we all got to do this, and here's what's going to happen. And boom, we transition into a new system. And again, do we bring out gold and silver backed currency with or a commodity backed currency using distributed ledger technology, or do we go to a CBDC? These are the questions that have yet to be answered, but people should ask themselves that, even if it's only a minute possibility. In 2019, if I told you any of the crazy stuff that went down over the 4 years was going to go down, you would say, I bet you everything I own that none of that happens. And look what we lived through.
Inflation is no longer a mere specter haunting the economy. It is an undeniable reality that is reshaping the global financial landscape. As Andy Schectman has astutely pointed out, the policies of governments and central banks are fueling this phenomenon, creating a fertile ground for gold and silver to assert their timeless role as protectors of wealth. Let's delve deeper into the intricacies of this economic transformation and the pivotal role that precious metals will play. Inflation isn't a transient hiccup. It is a systemic issue embedded in the fabric of today's economic policies. The Congressional Budget Office, CBO, has painted a grim picture. By 2031, all federal income tax revenue will be consumed by interest payments on the national debt and mandatory entitlement programs like Social Security and Medicare. This stark reality underscores how deeply inflation is rooted in the financial system. The challenge is twofold. First, rising interest rates make debt servicing more expensive, creating a vicious cycle of borrowing and inflation. Second, the reluctance to address entitlement spending means that deficits will continue to balloon. Even if government spending were miraculously trimmed by $2 trillion, a scenario Schectman himself finds improbable, annual deficits would still exceed $1 trillion. This unrelenting fiscal pressure means that inflation will persist, eroding the purchasing power of fiat currencies. For individuals and families, this translates to higher prices for goods, services, and basic necessities. But for gold and silver, it presents a significant tailwind. These metals thrive in inflationary environments because they retain their value as fiat currencies falter. Trump's proposal to impose tariffs on metal imports adds another dimension to the inflation story. While these tariffs aim to protect domestic industries, they also exacerbate inflation by increasing the cost of imported goods. In the context of precious metals, this means higher premiums for physical gold and silver. Already, the fear of such tariffs has widened the spread between the exchange for physical EFP price and the spot price of metals. For investors, this is both a warning and an opportunity. Acquiring physical gold and silver now, before tariffs potentially drive up costs further, could prove to be a savvy move. The premiums we are witnessing today may pale in comparison to what could come if tariffs are implemented. Schectman's analogy comparing the purchasing power of the dollar over time is both poignant and alarming. In 1974, gold was priced at $42 an ounce. Today, it's over $2,000. Similarly, a Corvette that cost $6,500 in the 1970s now retails for over $100,000. The question isn't whether these assets have become more expensive. It's whether the dollar has lost its purchasing power. The answer is clear. The dollar has been systematically devalued by inflation. This erosion of value acts as a hidden tax, silently chipping away at savings and investments. Gold and silver, however, are immune to this devaluation. They don't rely on government policies or central bank decisions. Their value is intrinsic, making them a reliable store of wealth. Inflation is often referred to as the silent killer of wealth, and for good reason. Unlike a stock market crash or a housing bubble, inflation doesn't make headlines in the same dramatic fashion. Instead, it quietly erodes the value of money over time, leaving people with less purchasing power and fewer options. Gold, on the other hand, acts as an antidote to inflation. It doesn't just preserve wealth, it grows in value as fiat currencies falter. This isn't a speculative assertion, it's a historical fact. In every inflationary episode, from the hyperinflation of Weimar Germany to the stagflation of the 1970s, gold has emerged as a safe haven. Schectman's musings about Trump's role in a potential economic reset are both provocative and thought-provoking. As a seasoned businessman with extensive experience in restructuring and bankruptcy, Trump could be uniquely positioned to oversee a financial overhaul. But what form would this reset take? One possibility is a controlled demolition of the current system, followed by the introduction of a new monetary framework. This could involve a return to sound money principles, with currencies backed by tangible assets like gold and silver. Such a system would impose fiscal discipline and curb the excesses of fiat currency creation. Another possibility is the adoption of a central bank digital currency CBDC. While CBDCs offer efficiencies in payments and financial inclusion, they also raise concerns about privacy and government control. The question, as Schectman puts it, is whether Trump is riding the Trojan horse or is the Trojan horse himself. In the midst of these uncertainties, gold and silver offer a sense of stability. Unlike fiat currencies, which can be printed at will, precious metals are finite resources with intrinsic value. They have stood the test of time, serving as a store of wealth for centuries. The case for gold and silver becomes even more compelling when we consider their role in a potential new monetary system. Whether it's through a gold-backed currency, a strategic Bitcoin account, or a hybrid system that combines blockchain technology with tangible assets, the future of money is likely to be anchored in something real. The idea of a commodity-backed currency isn't just a relic of the past. It's a forward-looking solution to the challenges of today's financial system. By pegging currencies to gold, governments could restore trust and credibility in their monetary policies. Blockchain technology could enhance this system by providing transparency and preventing manipulation. Schectman's suggestion of a strategic Bitcoin account adds another layer of innovation. Bitcoin's fixed supply and decentralized nature make it a natural complement to gold in a new monetary framework. Together, these assets could form the backbone of a resilient and equitable financial system. The journey to a more stable financial system won't be easy. It will require tough decisions, significant sacrifices, and a willingness to embrace change. But for those who understand the dynamics at play, the opportunities are immense. Gold and silver are not just safe havens. They are lifeboats in a stormy sea. As inflation continues to erode the value of fiat currencies, these metals offer a way to preserve and grow wealth. For investors, the time to act is now. Despite the challenges, there is reason to be hopeful. History has shown that periods of economic turmoil often pave the way for renewal and growth. Gold and silver, as enduring stores of value, will play a crucial role in this process. As we look ahead to the coming years, it's clear that the importance of these metals will only grow. Whether you're an experienced investor or just beginning your journey, now is the time to secure your future with the timeless value of gold and silver. The road may be long and uncertain, but with these assets in your portfolio, you'll be well prepared for whatever lies ahead.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.